Knowing what a cash flow statement is a basic requirement for all entrepreneurs. If you're thinking about setting up your own business or already have one,
You must be very careful with several items that can lead your company to bankruptcy, and cash flow is one of them.
now understand what a cash flow statement is and the 10 fundamental rules to make it really work. What is cash flow statement? Cash flow is one of the most widely used tools in accounting sciences, serving as a financial management instrument that projects all the inflows and outflows of financial resources of the company for future periods. Then, it indicates what the cash balance will be for the projected period.
In finance,
Cash flow refers to the flow of money in the company's cash register. That is, the amount of cash received and spent by a company during a defined period of time.
and why is the cash flow statement used for?
The cash flow statement will show the control of the activities of the company's operational cycle. In other words, it is all the activities of buying and selling goods and services of the company in the short term and their respective payments and receipts. This way, you will have more effective control and management based on numbers that will help you make decisions in the present period, but also for the future. The 10 fundamental rules of cash flow statement. Now that we have shown you what a cash flow statement is, we will show you the 10 fundamental rules for developing, managing, and controlling your own business very well. According to studies, one of the biggest causes of business bankruptcy is poorly managed cash flow. It may seem silly, but controlling your cash flow is essential for the success of your business. And that is why we decided to write this post to help all those who have their own business to avoid facing the problem of bankruptcy. 1. Do not confuse profit with money. Money and profit are not the same things. Profit is an accounting concept, not money in your bank account. Profit is what is left after you deduct all your costs and expenses from sales. Therefore, read carefully the following points that we will cover here, showing how your business could be more profitable but has money tied up in inventory or accounts receivable, for example. 2. Cash flow is not intuitive. Don't try to calculate cash flow in your head. Some numbers and factors will confuse your memory. Trust me. For example, many companies need inventory. And inventory means, in a more superficial way, money invested and sitting on your shelves. In other words, it has not yet become a sale. These is just a basic example of factors that need to be considered in cash flow. But many people underestimate this calculation of the dates when money enters and leaves the company's account, and this is a very dangerous mistake. Therefore, have a person responsible for doing this in a detailed manner who understands this flow. 3. Growth requires money. Growth is very important for any business, but it usually requires extra money. After all, you need to build and buy things months in advance, and you will only receive the money from potential sales months later. It may seem a bit of a paradox, but investing your money in advance to expand can end up hindering your own business. It can also cause major financial problems for the company if you do not have a good cash flow planned.
However, be careful because growth costs money. It is a question of working capital. The faster you grow, the more financing you need. 4. Sales between companies get your money. The simple view is that sales mean money, but when you have your own business that sells to another business, what we call B2B, business to business,
It is rarely that simple.
you usually deliver the goods or service along with an invoice, and these customers pay that invoice later. Usually, this can be up to months later.
And companies are good customers, so you can't just treat them without exclusivity, because they may never buy from your company again, and each B2B customer represents a large part of your revenue. In other words, if the customer takes a long time to pay your company, you will have the famous term accounts receivable. This means that you have already made a sale, but the money has not yet reached you. Therefore, it does not exist yet, and this must be considered in your cash flow. In this case, investing months in advance and receiving months later. That is why it is very important to plan in the meantime and understand how you will sustain yourself until the money from the sale hits your account. 5. Inventory consumes money. As we pointed out previously, you need to buy materials and inventory before you start selling. And to do this, an initial investment is necessary, especially because your suppliers need to be paid. And here is a simple rule. All the money you have in inventory is money that is no longer in your account to be spent, invested in other things. So, calculate carefully how much to invest in inventory so that you do not leave money sitting on the shelves.
Literally.
6. Working capital is your peace of mind. Technically, working capital is an accounting term for what is left over when you subtract current liabilities, in short, accounts payable, from current assets and rights that can be converted into cash in the short term. In practice, it is the money in your bank account or cash register that you use to pay your operating costs and expenses, and to buy the necessary materials while you wait for payment for sales made to your customers. So, if you want to know more about this subject, write working capital in the comments. If you get enough comments like this, we will be happy to develop a video on this topic for you. 7. Plan well when you will receive the money from your sales. A key point is knowing how to control and plan when you will receive the money from your sales, mainly because your own business will have bills to pay, such as inputs or raw materials, electricity, and employees, among others. This way, you will have control over how much you can invest at a given time, as negotiating payment terms with customers and suppliers. Knowing how to plan this cash flow is essential for the success of your business. 8. Have a financial reserve. Having a financial reserve is very important for potential surprises, both positive, such as a business opportunity or expansion, for example, and negative, such as an unexpected drop in sales or emergency equipment maintenance, for example. Therefore, calculate a considerable amount for your financial reserve according to your own business to be prepared. 9. Consider these 3 points in your cash flow. Pay attention to these 3 vital metrics: accounts receivable, how long you wait to receive payment; inventory turnover. This is a measure of how long your inventory remains in your working capital and obstructs your cash flow; payment days. This is how long you wait to pay your suppliers. Always monitor these 3 points of cash flow. Create a cash flow forecast and project it over 12 months. Once this is done, compare your plan with what happens on a day-to-day basis. Then, analyze and look for points to be improved, as well as alternatives and opportunities to be found along the way. 10. Monitor your cash flow daily. Don't go on autopilot. Always monitor your cash flow statement and know how much money you have in your cash register, and make projections of your cash flow for as many dates as you deem necessary. Don't do the math in your head. As we said before, set up a spreadsheet, write it down on paper, and hire a system or a professional to do the cash flow. Do whatever you think is best to organize your own business. Now that you've seen what a cash flow statement is and its 10 fundamental rules, it's time to put it into practice. Make a coherent and well-planned cash flow. Don't underestimate it. It's a key item for the success of your own business. Cash flow will help you a lot to manage your own business more assertively and reliably. So if you want to know how to set up a cash flow that works, write cash flow development in the comments. If you get enough comments like that,
We'll be happy to develop a video on this topic for you. We hope you enjoyed it, and if you want to know more about how to set up and manage your own business, visit our YouTube channel where we have several videos about this subject, and if you liked it, share this video with your friends and family to help them too. Thanks and see you next time.